Good afternoon, everybody. Thank you so much for joining our VA home loan workshop. Special thank you to Ellen over the USO Pathfinder program. She's on the call with us today.
Hey there. Thanks, David, for having us.
Of course. Yeah, thanks for everyone who registered. We normally do these webinars in person, but with everything that's happening around the country, we decided to explore and do our webinars, which have been doing pretty good. So today, guys, we're going to be talking about various aspects of the VA home loan and housing, especially with what's happening today with the whole COVID-19 and how it might hold some people from buying. And for others that do own properties, what are your options? So I'll be covering some of those topics today. Give you guys a little bit of background about myself. So I am vice president at the Federal Savings Bank, where I specialize with working with folks across the country, helping them utilize their VA home loan benefits. And I'm also an instructor for the National Association of Realtors, where I teach the military relocation professional certification, accredited buyer's representative, and also a condo instructor, along with having 6 real estate licenses, including pre and post licensing instruction. Also writer for Military Times and currently serving in the Army National Guard. Just one housekeeping item, guys. If you guys have questions, please post them in the question and answer section of the Zoom call, or you're able to post them in just our regular Zoom chat. When we think about housing, it's confusing. There's a lot of different options that are out there. If you go online, if you've researched buying a home, you'll see that you go to one site, they say one thing, you go to another, it's completely different. You talk to your parents, you talk to your friends, you talk to your friends' parents, and you'll have different answers on what their experience was, what information they have, and then contradicting information across the board. So today's goal is really to give you enough information for you to ask the right questions, because you're not necessarily going to be able to get everything you know from a webinar like this, but it's going to empower you to ask the right questions that are going to fit your financial situation. It's different for everybody, and you really need to talk with a professional in order to determine what is the right course. Now, earlier I mentioned in the Zoom webinar chat, is there something in particular you guys would like to learn that potentially might not be covered in this webinar? If you guys have those things come up, again, please post them in the webinar on the Zoom chat. Some things that are not covered in here, which we are based on prior experience of doing these, is the VA home loan really beneficial? When should you be using it, and how to leverage it correctly depending on what you're looking to do? So I'll kind of be going over that in today's webinar. The agenda is going over the VA home loan myths that still exist today. We're going to be talking about the benefits of the VA home loan. We're going to do a side-by-side comparison of what it looks like for a conventional loan, an FHA loan, and a VA home loan. We're going to talk about eligibility requirements. We're going to talk about qualifying. Two very different things. Some people may be eligible but not qualified. Some people may be qualified but not eligible. And we'll talk through various unique situations as well for military members. And this is going to cover active duty, Guard, Reserve, and veterans alike. So we'll just kind of cover all 3 of those. We're going to talk about various housing options. What type of properties can you buy with the VA home loan, and how does that work? And then we're also going to talk about closing costs, because that's kind of an important aspect of the VA home loan. Just because you may not be putting any money down on the VA home loan doesn't mean there's costs involved, and every market's different, which I'll help address that when we are having our discussion. Again, if you guys have any questions, please put that in the comments. Some of the common VA home loan myths that I come across even to this day is, how many times can you use your VA home loan? So normally people will say, well, you can use it once, or you can only have one VA home loan at the same time. So the VA home loan itself is a life benefit, even if you get out of the service. Now, there's some stipulations around that, where you have to be on active duty for at least 24 months, or you've been in the Guard for 6 years. Now, if you were active duty prior and for 2 years, then went to the National Guard, your active duty time supersedes that 6 years. So you would be eligible for it, along with a couple other various adjustments to that rule, like if you get discharged because of a disability or medical discharge. Those are things that you'd still be able to qualify for, but you really have to check with your local regional like the regional loan office for the VA home loan, or contact the lender to determine that. One question is, another one that we get common is, how many VA home loans can you have at the same time? There is actually no limit to it, but at some point you'll exhaust your eligibility. Now, I will cover what the new changes are for 2020, because there's a lot of confusion around, I thought there's no limit to the VA loan. Why do I have to still put money down in certain situations? So we'll cover that. And then, can you buy two homes with no money down on both? The short answer to that is yes, you can. We do it all the time for folks, but it just depends on what area you're buying and what the cap is in certain areas. Now, across the country, the VA home loan cap is $510,400 if you own another property with the VA home loan. It's important to note, because with the 2020 changes, there is technically no limit on a VA home loan. This includes, you want to buy $1 million property in an area, it doesn't make a difference where you want to buy, but if you want to buy $1 million property anywhere in the country and you're eligible and you're qualified, you're able to do so with no money down, as long as you don't have an outstanding VA home loan. Now, something I will be talking about as well is that you can refinance VA loans into conventional loans. You can refinance conventional loans into VA home loans if you sell your property that had a VA home loan on there. There's a lot of different ways to massage how you can use and leverage your benefits. Another common one I guess, how long do you have to live in your home before you can rent it? This also applies to folks that typically I'll hear, oh, you have to be in your property for a minimum of 1 year in order to rent your property out. Well, that is not the case, because it is circumstantial. And I'll give you an example of that. So like for myself, if I'm in the National Guard right now and I buy a home and close on it next month, and then I need to deploy for 6 months to a year, I'm able to do so and rent my property out because it's circumstantial. The VA obviously doesn't want you buying properties just to turn them into investment properties. That kind of defeats the point. But you do intend to occupy a property within 60 days. So just note that. One other thing to take note of is we do a lot of folks, we help people buy homes that are overseas, Afghanistan, Germany, Guam, Puerto Rico, and they buy homes in, for example, like where I'm at in Chicago, and they're able to do so as long as a family member is going to be occupying that property. Most people think that you have to buy and live there immediately. That is not the case. If you have family that is going to be occupying that property, and that's immediate family like kids or wife, husband, whatever the case may be, you're able to buy and they're able to live there. One question that we have is regards to earnest money. And I'll cover that in a little bit. So again, there is no defined time limit, but you just have to be wise with it. Who offers VA home loans? Who guarantees it? The VA doesn't do mortgages unless it comes to doing mortgages on sovereign land. That includes like Indian land and homes and specially adapted housing. The VA does those types of mortgages. Lenders do not. But this is also why it's so confusing out there for folks when they're looking online. They'll see one lender does one thing, another lender does another. And the real effects of COVID-19, as of Friday and yesterday, they've put a lot of restrictions on people qualifying for VA home loans, including higher credit scores. They might require reserves now, and you have to get what's called an automated approval. They've tightened up a lot of different things. And you also see that with interest rates, which they're highly fluctuating, which I'll go down that road a little bit later. Can you buy an income producing property with a VA home loan? Yes, you can. A lot of this depends on your area. In certain areas of the country, you can buy a 2-unit, 3-unit, or 4-unit building. Some areas call it duplexes. So that's another option you can buy. That's where you basically buy one property, but it has multiple apartments in it. You're able to do that with the VA home loan up to 4 properties. And can you use the VA home loan to do a construction loan? Yes, you can, up to 100% financing up into the county area. Danny, to answer your question about the earnest money is like putting a security deposit on a property or like on a rental, right? You're buying it, you're going to rent a property, you're putting a security deposit because you want to rent that property. Same thing goes with what an earnest check is. So if you're buying a $200,000 property and you're not putting any money down, there's still the sellers are still going to ask you to put some type of security deposit on the property called an earnest check. That earnest check, one of two things happens to it. If you're not paying any closing costs because all your closing costs are being covered by the seller, you will get that money back. If you don't, if there's still closing costs left over, that earnest money will be go towards closing costs. And if you decide to put a down payment, it will go towards your down payment or your closing costs. It doesn't make a difference. Another question we have, can I rent my house after 1 year with no problem? There is no problem with that. You can definitely rent your home after 1 year. Again, if it's circumstantial and you need to do it sooner than that, you can do that. I've called the VA and talked with them. There is no issues. Again, it's all circumstantial. If you need to get out, you can get out of it. So talking about some of the benefits of the VA home loan and why you should be using it, and then I'll also talk about why you shouldn't necessarily be using it all the time. One thing that you normally see online is interest rates seem more attractive on VA home loans, but you have to be very careful. And I'm going to go over this when we go over closing costs, because VA home loan rates are very misleading. Normally, because I see this all the time, they'll have what's called a 1% origination fee and also what's called a 1-point buy down. An example of that is like if you're buying a $300,000 property, it can cost you $6,000 to lower the interest rate to what you see on advertised rates. The problem with that is majority of people don't factor in that quarter difference or 3/8 difference in interest rate doesn't necessarily save them enough money to justify getting a lower rate. Now, this isn't a math class because this would require a whiteboard, the video, and just spending a couple hours with you guys kind of walking you through all the different aspects of how the benefit works itself, and then how do you look at a buy down. And Danny had a good question. So I don't understand an interest rate of 3.5, but an APR of 3.9%. What that means, I'm going to kind of give you a simplified answer. The interest rate itself that you're going to be getting is 3.5%. An APR includes what the interest rate is with fees. I'm going to give you an easy example so you guys can follow. And then these numbers aren't accurate, but you'll kind of get what it is. If a property costs $100,000, your payment is $1,000 a month, your interest rate is 4%, and your closing costs are $10,000. Those three things: $100,000 purchase price, 4% interest rate, $1,000 payment, and $10,000 in closing costs. Using that math, if closing costs are $10,000 and I subtract $10,000 from the $100,000 purchase price and I calculate for the interest rate, remember the payment's still the same at $1,000 a month, but now we're calculating it based on $90,000. Your APR, your interest rate's going to be higher because that's calculating what the fees are on the deal. Now, where you really want to look at those things on APRs is looking at closing costs and lender bottom and what the lender is charging you to get that. Another question we have, can you pay your loan off early with no fees? That is correct. There is no prepayment penalty on VA home loans. But again, when you look at interest rates, some people want to buy down the rate because they want to get the lowest rate possible. But if you're only going to be at a property for 3 years, it won't make sense because you won't be able to recover from that. And I'll give you guys some examples a little bit later. One of the big advantages of a VA home loan is you don't have to put any money down. Now, providing, again, you're qualified and eligible with the new rules for 2020. If you qualify for a $2, $3, $4 million home, you can buy it with no money down. But does it always make sense to do that? You have to pay what's called the VA funding fee with using your VA home loan. And that's the only fee that can be rolled into your mortgage. So on a purchase, when you buy a home, you cannot roll the closing costs in. The only fee you could roll in is the VA funding fee. If you don't put any money down and you're using it for the first time, it's 2.3%. So $100,000 purchase, $2,300 would be tagged on to your mortgage. If you're using the VA home loan again, so you used it once, you'll be charged 3.6%. So on that same $100,000, it's going to be $3,600 added onto your mortgage. Now, one thing that nobody talks about, because I do a lot of research on doing webinars and VA home loans, is remember when you're using the VA home loan with no money down and you have a VA funding fee, you're starting off your life having a mortgage upside down. Because if a value is 100,000 and you're buying it for 100,000, your balance is going to be over 100,000. Just kind of keep that in mind, especially if you're going to be in an area for a very short period of time. Does it make sense to buy? And when you put a down payment of 5%, that VA funding fee gets reduced. Same thing, once you put 10% or more, the VA funding fee goes down again. There is no private mortgage insurance. So regular loans that don't put 20% down get charged a monthly premium for the VA home loan. They get charged a monthly premium to use to have less than 20% down payment. VA loans don't. You're able to go up to 100% financing. The only thing you're paying is the upfront mortgage insurance premium. And in the next slide, you're going to see why that's a benefit and how you're going to be able to save. The qualifying standards on a VA home loan are a lot looser than looking at conventional loans. A lot of veterans to this day still get pushed away from VA loans into FHA loans because lenders tell them, oh, your credit might not be good. But that is definitely not the case. If you qualify for an FHA or conventional loan, you definitely qualify for a VA home loan. So that's just something to take note. Credit score. So we just talked about that. The VA does not have a set VA score for VA home loans. If you go to the VA handbook on the VA's website, all this information is public information for everybody to see. The credit scores are determined by lenders depending on their risk category and what is happening in the market. Like I mentioned, Friday and yesterday, we've seen a drastic adjustment to what creditors are looking at. Typically, they used to go down to 580, 550 with no issues. Now they're looking at 640 minimum credit scores. They're also looking at reserves. So typically you didn't need that before, but with the fear of people losing their jobs, they've placed these things in place. Now, this is all a temporary event that is happening right now with this whole COVID-19. Those things will loosen back up. There will be more stability once this has been resolved in the next couple of months. So you don't want to be in that quicksand effect where everything seems like they're going down and you're never going to be able to get out or you're never going to be able to buy again. That is definitely not the case. All this will get resolved. Things will loosen back up and you'll be able to do what you want to do if you're not able to do it right now. If you have a service-connected disability, this normally the minimum is 10% or higher, but technically it's 0%. And the only way that happens, and I've only seen it a couple times, is if you're getting discharged from the military and you also have some notes in regards to you having some type of service-related disability, and you don't end up going through and filing it, it'll still be on your notes. So you will be able to get that not pay the VA funding fee, which is an unlimited times. No matter how many VA home loans you have, you will not be paying that VA funding fee. Even if you refinance your home in and out of a VA home loan, there is no funding fee with that. Another thing that people discount is that if you collect, depending on what your rating or what your disability rating is at, you will be able to qualify for certain property breaks in certain areas. For example, in Illinois, in the entire state of Illinois, if you collect 70% or more in disability, and the value of your home is around $550,000, $600,000 or less, you do not pay property taxes. Other areas, like in Arlington, Virginia, that goes up to you need to be 100% disabled, up to $1 million with 3 acres or less in land. You don't pay property taxes. So every state has a little bit different. and you just have to know what those local laws are. If you guys need help in getting introduced to any type of realtors around the country, I'm happy to do so. I work with some amazing folks that understand veterans and then just understand the entire platform of how these tax breaks work. An example here that we're going to be taking a look at is conventional FHA versus VA home loans. Let me just get my little nifty spotlight. A second here. All right, so just follow with me because there's a lot of information on here. So we have conventional rates, conventional loans, an FHA loan, and we're also looking at a VA home loan. We price them out the exact same way. The taxes and the insurance are all the same. The rates that I used are for 700 credit score. Now, these rates were based on January 30th, 2020. So this is just about 2 months ago. But if you look at rates today, they are going to be higher. But again, they fluctuate constantly, and there's almost no need to just focus in on just 100% on the rate because they are still lower than they've been for a long time. So just kind of keep that in mind. Conventional loans typically require 5% down, an FHA loan's 3.5% down, and a VA home loan's at 0. You see the loan amount, it's straight math on a conventional. 300,000 minus 15, 285. FHA loan, you'll see that it's not straight math because they also charge what's called an upfront mortgage insurance premium. VA home loan, same thing. In this case, we have a $300,000 purchase, and we have a funding fee, the VA funding fee that's tagged on to this. This is how you see that your balance is already off the bat upside down compared to the value of the property. Here, when we look at the mortgage payments, we'll see 3.625% on a conventional loan, 3.25%, 3.25% on a VA home loan. The government products are pretty much on par with each other when it comes to rates. The APR will be different because, again, it's just determined. You got to determine how you want to get to that rate. Not everybody out there charges the 1% origination fee, a 1% discount fee. Some don't charge any origination fees or discount fees. Some do flat fees. But just keep in mind, nothing is free in life. So at some point, I mean, either you get it in interest rate because they're giving you like a lender credit to cover their fees in higher interest rates. So you're paying for it one way or another. Some people are just more focused on saving the most amount of money on the purchase, while others are focused more on the rate, and they'll do whatever it takes to get to the rate. We look at the private mortgage insurance. So again, the lower the credit score, the higher this PMI goes. But on the VA loan, you don't have it. So on average, on a VA home loan in this scenario, you're going to save $124 a month by not putting any money down. One question we have is, what's the main benefit of putting 10% down on the VA home loan? So two things. One, your overall payment on the mortgage is going to be lower. And that's all depends on how much money you're going to put down. Easy rule of thumb, for every $100,000 in purchasing power, for every $100,000 of a mortgage on a 30-year fixed is about $450 a month. So sometimes people are like, well, I want to put $50,000 or $20,000 down. And I'm like, how much does that change my mortgage? $40. And they're like, well, that's pointless. I'm like, it all just depends on what you want to do. In times like this, when we do our emergency financial management, budgeting, and credit classes that I've been doing, we focus more right now on saving cash, right? That's important to be liquid because you don't know how long this is going to pan out. And job security is also a factor for folks. So just kind of keep that in mind. And then the other thing is the VA funding fee gets drastically reduced, especially if you used the VA home loan before. So example of that is you're buying, I'll just give you guys some quick math. If you're buying a $300,000 property and you used the VA home loan before, remember that's a 3.6% VA funding fee. So the VA funding fee would be $10,800. Now on that same $300,000 property, you put 10% down, the VA funding fee is going to be 1.25%. Just give me a second here. I'll give you guys quick math on this. $3,375. So a little over 10,000 versus a little over 3,000. That's a big difference, especially if you're going into a property with no money down. So that'd be just really dealing the benefits. But for some people, they don't care. Or if they collect the VA disability, then it really doesn't make a difference. You can do whatever you want. It just comes down to what your bottom line is for your payments. One other thing to note too, because a lot of folks come when they want to buy a home and they're always focused in on the purchase price. I want to spend no more than 300,000, 200, 500, 600, whatever that amount is. And most people will look online at all these sites and look at all these real estate sites, and they give you these estimated payments. But those estimated payments doesn't necessarily fit what you're trying to do or your situation. So focusing on what your total payment is the correct way of looking at housing, because there's plenty of properties in this same example that we show a $300,000 purchase price that we can show you that have a $350,000 purchase price because they have lower taxes. Like I'm looking right now in Pensacola for a client, and we're seeing taxes that are astronomically low. It's almost making me reconsider, plus warmer weather. But the other side is some areas have really high taxes, high insurance, or they might be in a flood zone where your homeowner's insurance that typically is $80 or $100 now all of a sudden goes up to $400 a month. That's going to factor in on what you're looking to buy. Now, this information always isn't upfront, right? So this is, again, why talking and having that question, is this property in the flood zone, especially in the coastal areas or you're around the lake or river? You want to be asking those questions because that will have an effect on what you're trying to do. Next part of this is understanding your eligibility. This is just like your promotion points. You constantly want to be checking these. If you're still in the service, you'll need what's called a statement of service from your commander. This outlines your how long you've been in the service, last four of your social, what branch of service, and those types of things. If you're in the Guard or Reserve and you're still active Guard or Reserve, you'll still need a statement of service. If you've been out of the service, you have a couple different forms you get in order to have a record of your forms. There's two ways you can do this. You can go to a lender and request your certificate of eligibility. And then the other option is contacting a lender in order to be able to give you, to be able to pull that for you. Typically, lenders are able to grab it a little bit faster. If you're a veteran, you just need your DD-214. If you lost your DD-214 and you don't have access to your e-benefits to get a copy of that, there's a couple different ways you can do it. And what makes it fun is that every branch of service also has a different process. And it also depends on where state you enlist. So I'll give you a quick example. In Illinois, if you entered the service in Illinois, but you live anywhere else in the country, you're able to contact your local senator, and they're able to actually help you contact the archives to get a copy of your DD-14 if you're not able to get it. If you're in the Marine, if you're served in the Marine Corps, it is a bit of a complicated process, and it could take up to 6 months. Now, you can leverage different organizations. Like for the Marines, they have Marine for Life program. You're able to contact them to see if they can help you. In the Army, you have the Soldier for Life program that you might be able to contact. They might be able to help you out with certain aspects of that. Getting the copy of the DD-214, especially a crisp copy, is important. Let me just get my animation tool here. Just give me 1 second. So this is what a DD-214 looks like. You have the Department of Veteran Affairs, your entitlement code. That entitlement code is like for 10, it's anybody that served in the Gulf War to current. It's going to have your branch of service, and it's going to tell you what if you have a funding fee or not. Then you're going to see in here if you have prior loans, or if you currently have any VA home loans that are taking up your benefits. Take a note of this. If you guys have had VA home loans in the past and you sold that home, you refinanced out of that mortgage, whatever the case may be, you had a VA home loan on a property and you didn't check your certificate of eligibility afterwards, you need to check this because these old loans stay on your certificate of eligibility for forever. It's not just automatically taken off. So just make sure that you guys are tracking that. Next thing you're going to see is this veteran basic entitlement of $36,000. If you have no prior loans, your basic entitlement would be $36,000. That doesn't mean that you qualify for $36,000 of a mortgage. Because the rules have changed, and again, I'm not going to make it too complicated. Right now, if you have the $36,000 in your basic entitlement, and you qualify, there is no cap on the VA home loan. As long as you don't have an outstanding VA home loan, or if you're going to be selling your home. So I'm going, like for myself, right? I own a house. I have it listed for sale. Ellen at the USO is also a veteran. She wants to buy my home, and we go under contract. I then go and make an offer on another property. I can already assume my entire benefits with my new mortgage, but they will not go into effect until she buys my property. And that can happen the same day. I could sell my home in the morning and buy another property in the evening, and it will line up the used benefits for that. A lot of people don't know that. On the next document, you'll see that this person is exempt from the VA funding fee. On the bottom left-hand side, you'll see how much they're collecting in disability. So that's also a way for us to prove what that is. One question that came up is what's the funding fee? So the VA funding fee is a fee that the VA charges in order to use your VA benefits. If you collect the disability, you will not be charged that VA funding fee for the life of the loan as long as you have the disability, which is total and permanent. That's the only fee that can be rolled into the mortgage on a purchase. It cannot, and the rest of the closing costs cannot. But note, on a refinance, like when you do these interest rate reduction refinance loans, you're able to roll in closing costs in those programs. Now, switching over to looking at financial snapshot. So before we looked at being eligible for the VA home loan, now we're going to talk about being qualified for the VA home loan. So first thing that we looked at for employment is W-2 employees. So if you're out of the service, you're getting W-2. We're typically looking for a 2-year history, but that includes your employment through the military. So if you got off active, search for a job for a couple months, that's okay. I think I believe you have up to 6 months of looking for a job, or 6-month job gap in 2 years. You're able to do that. Then there's also just a lot of unique situations with W-2. This also includes being full-time employment, not part-time. Part-time employment does require 2 years, but there's a lot of various situations within the W-2 space that you would be able to apply and use your VA home loan. Self-employment, that requires a minimum of 1 year being self-employed, but you have to show income. The nice thing about being self-employed is you can write everything off, and nobody likes to pay taxes. So you have to pay taxes, and we use the money that you're actually taxed on to determine your income. Also note, if you have investment properties and you don't show the full rental income and you go apply for a mortgage and you say, oh, well, I make $2,000 a month on my rental, but you only show $1,000 a month on your rental on your tax returns, we will be using the $1,000, even if you provide all the documentation and proof in the world that you've been charging $2,000 this whole time. We will not be using that. We'll be using the $1,000. Transitioning from military to service work is relatively seamless. It just has to be at least somewhat in the field that you were in before. This is up for debate, but officers do have it a little bit easier, or if you're in an E5 or higher position, because you're more of a management role, so you can pretty much make anything work. Transitioning from school to civilian work is also pretty seamless. If you graduate from college, you don't have a 2-year working history, but you go right into a job that's similar in nature of what you went to school for, no issues with that. One thing to note when it comes to using your VA home loan with any of these employment situations, if your spouse is employed and you're not employed, or you don't do it, you're just kicking back, relaxing, you can still use the VA home loan as long as you qualify credit-wise and your spouse has a full-time employment job, or you're going to school full-time, whatever the case may be. Because remember, school benefits for BAH that you receive do not count towards income for the purposes of buying a home. But if your spouse is working full-time, you're able to be on the loan and just use your spouse's income in order to qualify. That's something that's note. There's plenty of unique situations out there, like I mentioned, with just the spouse thing right now. That's something that definitely comes up all the time. and there's people that are contracting, 1099, transitioning out of the military, going into contracting work, union jobs. Those are all very specific to your situation. And especially right now with what's been happening with this whole COVID-19 and lenders tightening up their requirements, really speak with a lender that you trust that can go over your financial situation to kind of best advise you on what to do. Disability, Social Security, and retirement income can be used for the purposes of buying a home. So a lot of times we have veterans that are 100% disabled, and that's the only income they receive, and we're able to help them buy a home with just that, or they have social disability plus retirement. You're able to use those incomes. The other part of that is when I mentioned a little bit up top, if you've been working part-time for a minimum of 2 years, we're able to use all that income. But again, it has to be 2 years or more, and there has to be some stability to it. Or if it's seasonal, but you've been doing it for 2 years, we're able to use that. Assets, well, that recently just changed a little bit, but you typically do not need reserves for a VA home loan. So if you're buying a home for $100,000, your payment's $100,000, and you got no money in the bank afterwards, you can still do the VA home loan. But is it wise to do that, right? So I covered that when our budgeting class that we go over, just to figure out how to budget for a class. Next thing is down payment. If you're going to put a down payment, you need to have that money saved up, or you can leverage things like a TSP account without any penalty. You can take out a loan against it for a down payment. The same thing goes with closing costs, because again, not every market is going to allow for or is going to have sellers willing to give you closing cost credits. This is a great example of if you're looking at property in Fort Polk, Louisiana, versus buying a home in Arlington, Virginia. In Arlington, Virginia, you're not going to get a single penny for closing costs. You guys have been trying to find homes in that area. You know exactly what I'm talking about. If you go to Fort Polk, Louisiana, they're happy to give you all your closing costs and everything paid for so you can buy the home and you have zero money out of pocket. Now, you still will have to you still have to put an earnest deposit down. I've only seen one transaction in the thousands that I've done that didn't take a deposit. Everyone else requires it, no matter how sweet the pot is or how little you have to put down or all your closing costs are covered. You still have to have some skin in the game. Credit score, we talked about that a little bit. What makes the VA home loan a little bit unique is childcare expenses do count against your monthly income. So that's another great tax write-off to write off childcare expenses, which why wouldn't you if you have them? If you could save on taxes, it makes sense, but it does hurt you in the long run when applying for a VA home loan, unless you make enough income to cover that. Danny asked a question. I'll cover that here in a second. Apply for a home loan. How long does it take to find a house? So once the main step, we'll take a step back here. So one of the main things when we're talking about all this housing stuff, the first thing that you do is get qualified financially. Because if you don't understand what you're comfortable with in your monthly payment, you can't work backwards to determine what you can qualify for in the area that you're looking. That has a big effect. If you qualify for a $2,000 payment, and that means $350,000 your max budget, you want to know, okay, well, if all the houses we're looking at in this area are $500,000, well, that part's not going to work. You're going to talk with a realtor to see how they're able to help you to fit those price points and figure out where you want to be. So for some people, how long that process takes could be as fast. I mean, I've seen my cousin found the house over the weekend. Just snap of a finger. They just went, looked, they found something, they loved it, they bought it, and they were like, we're not going to buy anything for a couple months. We have other people that are like, I'm excited, I want to buy something this month, my lease is up, we want to do this, and what ends up happening is they rent for another year. So everyone's situation is a little bit different. How long does it take to close on a home is another question. For example, like for us, it's 25 days. Right now, I think majority of people are around 45 to 60 days just because the people are closing out a lot of refinances. So that's another factor. But on average, it should take about 25 days to close on a home. And the other question that we have is, when will your first payment be made once you're closed? That's a great question. If you closed on your home today, March 31st, 2020, your first payment would be due on, hold on one second, let me see, May 1st. So you skip only a month, which is your April. If you close on the 1st of the month, so tomorrow, you would close on your home April 1st. Your first payment wouldn't be till June 1st. So you would skip 2 months. Now, again, if you close, to make this simpler, if you close in January, anytime between the 1st and the last day of the month, your mortgage payment will not be, in this example, in January. Your first payment is going to be in March. No matter when you close in January, your first payment is going to be March 1st. So a lot of times people try to close earlier in the month so they have some time, but you still end up paying for that because you have to pay days of interest on that, along with paying taxes and escrow. So you still end up paying for it. So it's not free unless you're getting seller credit to cover all your closing costs. Then it makes sense to close on the 1st of the month. Otherwise, you're going to pay that money one way or another, upfront or a month from now. So that part doesn't make a difference. Hopefully that answers the question. Retirement. If you're getting out of the service, how does that affect you buying a home? These are things that you need to take a look at. Is your income going to be lower? Are you going to be collecting disability? What does your retirement look like? And for everybody, it's different, right? Some people get out of the service, they have no debt, no housing. Hey, I went from making $90,000 a year to $60,000 a year with my disability and retirement. I'm happy with that. Some people, could be making $120,000 out of getting out of the service, and they have a high debt load, and then they try to go into the civilian sector, and they're like, well, I need to still make $120,000, but is that realistic? So those are all things that you need to kind of determine, and also makes it a little bit hard when you're going through that transition process is, am I going to have enough income to sustain what I'm currently doing, what my current lifestyle is like? And the same thing is important to understand with housing. Some people go into this thinking, hey, I'm getting out of the service, I'm going to go buy a place, but they don't have everything lined up, primarily employment and income. Disability, you really don't find out until towards the end of your, or right when you're getting out, they'll tell you, okay, this is what your rating is at. Another thing that is counted against, or how debt to income ratios get calculated is the VA looks at residual income. So that's what your net take home is what they're going to qualify you on. And I'll tell you this, the VA home loan is some pretty loose standards when it comes to looking at someone's debt to income ratio. So you could definitely stretch your budget substantially with the VA home loan. I think it's we can't tell people no, like if you qualify, you qualify, but just kind of keep that in mind. You really need to understand what your budget is. And it's just not what your regular liabilities are in a credit report that a lender sees. You still have to buy food, your car insurance, your cell phone bill. All that stuff isn't included when a lender looks at your debt to income ratio. Falling in love with the house is pretty easy, but paying for it is a whole nother story. And some people will max out their budget, but then they bought a home that wasn't energy efficient, and now they're having $300 gas bills because heating is so expensive, because they have an outdated heating unit, or air conditioning is outdated. So now in the summertime, we're spending $600 a month when we normally used to pay $100 a month. So just be very aware of that and ask those questions. You can't ask them. You can ask whatever you want. This is a debate that I'm not going to argue about, but I'm just going to give you facts on officers versus enlisted. Why does it make a difference? Does it make a difference? Yes, it does. The reason is officers don't have an ETS date and enlisted do have an ETS date on their LES. Now, one thing that was pointed out to me, about a month ago during a seminar, is that enlisted will no longer have an ETS date after they renew their contract at the 12-year mark. It will be like officers. They'll just be in until they get out. So just note that. Again, right now, officers don't have an ETS date, so that's why a lot of times they're able to buy a property as they're getting out of the service because there is no end date, so a lender wouldn't even know the difference. On enlisted, we know when you're getting out of the service, but you have to have a continuous verification of employment. So if it shows your ETS date on your LES, we know when you're getting out. And if you're not renewing your contract, then we know you're getting out and we can't use that income anymore, even though you're currently receiving it, unless you re-enlist. And that's within 1 year of ETS. Another question I get with that is, if I'm stationed in, or if I'm currently in DC and I'm retiring out of DC, but my home is in Chicago or it's in California, can I buy a primary residence there? Well, it's kind of a tricky question because unless you're getting stationed there, it's going to, or have family that's going to live there while you're stationed in the DC area, that's something you got to kind of look at, and everyone's situation is going to be unique to themselves. Waiting periods. We'll go 1 second here. We have a question here. So we have a question is giving 3 different applications too much? So basically, if you're applying with 3 different lenders, is that going to affect your credit? So you have a 15 days grace period from the first time you have your credit looked at in order for, so you have 15-day grace period from the first time your credit pulled by a mortgage company. In those 15 days, credit could be pulled unlimited times by mortgage servicers or professionals, and it'll all count as one credit application. Your credit is good for 90 days. After that 90 days is up, you will have to have your credit looked at again. So the question of if having 3 lenders look at your loan, is that the best? Is that the best way to find by doing 3 different comparisons? And that's a question that I think it's a tricky one. And this is why. Lenders will charge you their interest rate. Some people focus on the interest rate. And again, they won't realize that all the fees that they're charging. How many times I've talked to people, they're like, oh, I'm not getting charged origination discount points. They're just giving me a great rate. They come to closing, they're short on money. We look at their loan, or I just take a look at it. I'm like, well, yeah, because they charge you all these fees. Did anybody explain that to you? And normally they don't. So when you're looking at working with different lenders, there's a couple of things that you want to take a look at. 1, do they explain everything and do they have transparency? 2, how do they communicate with you? Because you want someone that's going to communicate with you throughout the whole loan transaction, because there's a lot of things that are happening that lenders need to be involved on. When you look at interest rates, again, until you find a property, the rate's not locked in. I've seen crazy things when people are just like, oh, this is what the rates are. I'm like, well, that's not even close what the rates are, or how much are your fees associated with that. Majority of consumers don't even ask, like, hey, what are the closing costs, or not closing costs, what are your discount points and origination fees to get that interest rate? I mean, I would say 99% of people never even ask that question. They just ask what the interest rate is. The banks take advantage of that. So hopefully that answers your questions. Oh, and then one other thing too, that people face with getting pre-approved or trying to find the right lender. I can't tell you how many times I look at people that went through the entire loan process and ended up getting denied because their lenders didn't fully review all the documents that that the clients provided before they gave them a pre-approval. You want to make sure that your lender reviews your entire loan application and you've submitted all your income docs, paychecks, LES statements, bank statements, tax returns. Some people think that it's too much to get all that information just for a pre-approval. But I'll tell you, just like in the military, it's just one small error, like I do intel work, one small error or one thing that you missed that you should have known, that you thought like this is an important, ended up being such a critical component of a decision that you've made that you will end up just derailing your transaction because of that. So always be very transparent and make sure your lender does a lot of VA home loan purchases. So many times people always say like, oh yeah, we do VA loans. Yeah, we do VA loans. How many VA loans have you done? And they'll say, oh, I've done 2 in the last year. No, you need somebody that is a professional that knows how to do these, that's doing 10 plus VA home loans purchases a month that is familiar with the whole entire process. If you've been through buying a home in the last couple of years, and you'll know what I'm talking about if you have worked with someone that doesn't know how to do VA loans. They require some type of specialty. Hopefully that answers your question, Danny. So waiting periods. So you see conventional VA and FHA loans. Let me just give a little magnifier here. So we took out conventional loans. If you had a bankruptcy, it's normally 4 years. Chapter 13, 2 years. Foreclosure, 7 years. If you look at VA home loans, they're loosest out of all of them. Chapter 7, 2 years. Chapter 13, 1 year. Foreclosure, 2 years. Deed in lieu, 2 years. This is an important note. I know I say that a lot, but there's a lot of things to know. So VA home loans, if you had let's talk foreclosure and short sales. If you had a conventional loan or FHA loan, any loan outside of a VA home loan, and you had some type of foreclosure or short sale on that property, and you want to use the VA home loan again, it doesn't make a difference. You clear that 2 years, your credit's bounced back, you've established new credit, you're good to go. There is no issues. If you use the VA home loan and that property on the VA home loan went into foreclosure, you have locked out your VA home loans for that portion of the loan. Again, this isn't a math class, so I'm going to make it simple. You bought us $800,000 home, you lost that home in a foreclosure, your entire entitlement would have been depleted because of that foreclosure, and you would have been responsible for paying the VA back all that money in order to get your entitlement back. And with the new rules, they did not change that. So I thought they would be changing that, but if you lost that entitlement, you're not able to use it again. But again, some people lost, $200,000 home on a VA home loan. They still have entitlement left, but it's going to work differently than the new rules. If that is something that's happened to you guys, feel free to reach out to me and ask any questions after the seminar. Again, I'll be sending all this stuff out to you guys. Property types and the restrictions. Buying single-family homes, that's an easy one. A lot of people like buying single-family homes. Some of the VA restrictions are no cracked sidewalks or peeling paint. They're a stickler about that, and they will cause the loan, not necessarily to have issues, but those things will have to get repaired unless it's weather-related, like when it snows a lot, you're the snowy area in the Midwest. If it's snowing and there's repairs that need to get done, you can get those fixed after the closing. Condos require a special type of VA approval. And then where do you find that? It's going to be in this government website. If condos are not VA approved, they typically take 14 days or to 30 days. This is what we have listed up here, but lately they've been really fast. Even with everything that's happening, they're normally 5 days or so to get turned around. No, townhomes is not a type of construction. It's not a type of loan. Townhomes don't exist in the finance world. Condos exist. Single-family homes, like attached single-family homes, like where homes are attached to each other, exist. Planned unit developments, those are developed communities, exist. But townhomes and financing do not exist. And a lot of times I get calls from folks around the country where a veteran is trying to buy a quote-unquote townhome, but they didn't realize it's not VA approved because it is a condo. Again, majority of townhomes construction style are condos. You can buy 2 to 4 unit building, 2 to 4 unit properties. We talked about that a little bit. You can use rental income to offset mortgage if you have management experience. That includes having a real estate license. That includes having a real estate license for at least 2 years or managing property. You'd be covering under that. And it used to be the Fannie Mae single family loan limit, but again, there is no limit anymore. So if you want to buy a $2 million 4-flat in downtown DC, or I guess all of DC is downtown. If you want to buy in the heart of DC, you're able to do that as long as you're qualified for that property. All properties require a termite inspection, which the veteran cannot pay for. This includes condominiums. Now, in certain states, they've loosened up the restrictions, which they've posted to their online site, to the VA portal that I pointed to in the prior slide. That information is available, and it'll tell you where you can't do it. So we talked about it doesn't apply all to areas. If you're buying in a rural area, you will be responsible for getting a well and septic inspection that you will pay for as a veteran. and the fees vary widely on that. Every loan requires a appraisal that meets the VA standards for safe, sound, and sanitary. Obviously, if they're not obviously, but if they're providing you 100% financing and you have a VA funding fee, you're upside down on your mortgage compared to the value. They want to make sure that they're getting a property or they're insuring a property that meets the standards of the VA. So basically, being move-in ready. Some people will ask, well, it doesn't have to be a brand new home, right? It could be outdated as long as it's structurally, well, I can't even say structurally sound, because an appraiser, when they go out, they just go out to determine the value of the property. And then again, on a single family home, they're really looking for peeled paint and any cracked sidewalks, which from cracked sidewalks, they've kind of gotten away from that as well. There's really peeling paint and any major type of issues that they can see, they'll know that would have to get repaired. There's definitely a difference between a home inspection and an appraisal. An appraisal is an appraiser that's contracted or they've taken exams in order with the VA in order to become a VA appraiser. They're also regular appraisers, right? But they also happen to do VA appraisals, and they determine the value of a property. A home inspector's job is a home inspector is licensed by the state to inspect properties. They come out to your home. They typically spend about 3-4 hours. They tell you everything that's wrong with the property. So you should never be worried about when buying a home, all the different issues that come up on a home inspection, because every single home is going to have issues, including new construction. We look at, so I just pulled some BH information. I kind of made this sorry about that. I made this pretty simple. Get my little magic wand. So on your left column, you see what you're getting in your BAH. On the right is what your affordability looks like. Now, all I did was I worked backwards. I know what your annual tax. So I said, well, roughly in a certain area, they're $4,800 in annual taxes, and on average, it's $800 in annual homeowners insurance premium. So I was able to take the payments, work it backwards, and give you what your affordability would look like in certain areas. So some people that are collecting $2,400 a month or $2,500 in BAH can go up to a certain dollar amount based on taxes and insurance. So again, this is kind of that whole idea, which is to look at what you're comfortable with in your monthly payment and then work backwards to what you can afford. These things too, I mean, as you see, there's about a $50,000-ish difference in payment, or $50,000 in difference here in what you qualify for, a little bit more than that, $60,000. You'll see it's about a $250 difference in payment. Sometimes people want to go in and they want to do projects themselves. They want to come in, I'm a DIY, do everything myself. I can make the house pretty, but that takes time, right? That takes time, inconvenience. So sometimes when you look at when buying homes, people are sometimes stuck to a certain budget, but they're willing to spend money on doing renovation projects. But sometimes does that make sense? And it's vice versa. You know, can I get a property that's $300,000 and I put $100,000 in to make it what I need it to be, or do I buy something that's more expensive that's already move-in ready? Every market's different, so you just have to talk with a realtor and just look at your own financial situation to see what you're comfortable with in a monthly payment. If you're in the high veteran population area, active duty population, you also have to take note when you buy a home and you're thinking, well, I'm going to be here for 3 years. Like we get a lot of this with DC folks. Yeah, I'm going to be here for 3 years. And then at some point, I'm going to come back and live here. Great. So what do you have to look at when you try to do something like that? Which this is also a rule of thumb in any area that you're buying, in my opinion. You always want to be looking, if I buy this home at this price point, can I rent it out and cover my mortgage or make some extra money based on what BAH is in this area? Because then at least you have a better chance of being able to rent your property out. And a realtor can help you with that stuff. They can help you walk you through, and they'll know what the average prices for rent are in your area just to make sure everything lines up. You just don't want to be upside down. I know somebody right now that's they have an investment property, they rent it out, and they're spending $500 extra a month to cover the mortgage payment. Like they're just giving that money away. Closing costs. This is something that I touched on a couple times. You have the origination fee. Typically, it's 1%. How does that affect you? Well, on a $500,000 purchase, there's an extra $5,000 of free money you're just handing out. Discount points, same thing. That's used to lower your interest rate. It's going to be 1% typically. So I get questions a lot about, oh, I want to see what your closing costs are. I want to know what your closing costs are. Or people asking other lenders, what are your closing costs? What are your closing costs? It doesn't make a difference. I'm going to say this with a grain of salt. So just listen. It doesn't make a difference what the lender's closing costs are. You can look at 3 different lenders, and one will tell you, oh, closing costs are $10,000. The other one tells you they're $20,000. The other one tells you they're $30,000. For my end, doing this every day, I would go, well, none of that makes a difference to me. I don't care what that closing cost is that they're telling me. The only thing I care about is what the origination charges are, what the origination fee and the discount fee is, and that's it. The reason why on a purchase transaction, the lender doesn't control the rest of the fees. They're literally made up with a click or the stroke of a finger. Like, oh, we're just going to pick these fees because they don't know what those closing costs are. That's something that makes people frustrated, is because we don't know them, because we're not the ones responsible for the closing costs. We're responsible for aggregating all the third parties, but when you don't have all the information in front of you, how can you make that decision? You can't. The only thing you look at when you compare lenders, when you're looking at just the fees, is just the origination and discount. That's it. The rest of it doesn't make a difference. Again, no matter how widely they change, you just wouldn't care about that. You'd just be looking at this. Average closing costs typically represent 2 to 3% of a purchase price. That's pretty national. VA home loans are also, they're really expensive. They're typically 4 to 5%, just because majority of your favorite VA home loan banks charge those fees. Veterans, they don't even go through the loan with them majority of the time, and then you don't even see you getting charged those fees. Just kind of keep that in mind. Seller closing credits. Sellers can pay for all closing costs. There is no cap on a VA home loan. There is with other loan products. So if you're buying a $200,000 property and closing costs are $15,000, seller could pay all $15,000 in closing costs with no issue. On top of that, on top of paying all your closing costs, they're able to give you up to 4% of the purchase price in concessions. Those concessions can be used to pay off personal debt and like installment debt, car loans. I've just had that happen with somebody. We paid off a car loan and they were able to qualify for a VA home loan where they weren't before. Now, keep in mind, this isn't every area. This rarely happens nowadays, but in certain markets, it definitely happens. The 2020 changes we touched on a little bit. There is no cap on the VA home loan as long as you have your full entitlement. This includes switching from conventional FHA out of your VA home loan, or if you had a VA home loan on a home before, but were forced to use a conventional loan because you didn't have your benefits freed up. Now you're paying private mortgage insurance, or have a condo that you bought with a conventional loan. You can easily, if you sold the other home, you have your benefits, you could refinance your conventional loan into a VA home loan and get the condo VA approved. It's not hard. It's pretty easy. And you're not paying private mortgage insurance. Another big change is if you have no funding fee for active duty military members that have a Purple Heart. They increase in VA funding fee, so it went to 2.3% across the board for first-time use. It was 2.15%. Then if you're subsequently using the VA home loan, it went from 3.3% to 3.6%. Understanding is buying a home right for you. So there's a lot of things to consider, and we're just going to cover a couple of them. Everyone's decision is personal. I just seen too many times where people might stretch their budget too much to be able to get into housing when they have other expenses, but they don't have a budget. Huge fan of budgets. Consider how long you're going to be at a duty station. Some folks are ninjas. They own homes at every duty station they were at, and by the time their 20 years or 25 years is up, majority of their homes have been paid off and they made good financial decisions. But I'll tell you what, I'll see way more that try to do the same thing that end up going into foreclosure, or there's base closures, or something happens where they end up losing on that. So just be really careful and smart about how you do that. If you're going to be living at a place for a year, it might not make sense to buy a home in that area. You got to look at your long-term financial goals. We see this happen where you live in DC, you buy a home, your BEH is high. Then you move to somewhere like Fort Polk, Louisiana, where your BEH goes from $3,000 a month to $900 or $1,000 a month. And what if you can't rent that other property out and you don't have enough in savings? How are you going to do that? Just kind of keep those things in mind. There's way more to own than just owning the house itself. There's repair costs, there's holding costs, maintenance. You have to maintain the property, so that costs up a couple $1,000s a year. And then what if you need to rent the property? Do you have enough money to cover the mortgage for it, if anything, right? One thing to know when I talk about maintenance and repair costs, I'm a huge fan of home warranties. I believe in them like you wouldn't believe. The reason why is they are about $550 a year. They do military discounts, so you could probably get a discount on that. You could do your own research on there. I don't promote any of them. Home warranties, what they cover is all the mechanicals in your home, including like your HVAC, water heater, your washer, dryer, fridge. They cover all that with a $100 deductible. They'll fix whatever it is. I'm telling you, this stuff, it works like a charm. The only thing it doesn't cover is a roof, and you can use these on investment properties and multi-units. And then having extra money in the bank if things do go wrong, because for some reason tenants always seem to find something wrong. Staying in the military is not guaranteed, right? You can get discharged from the military. There could be drawdowns. We've seen this happen plenty of times. And how are you budgeting your expenses? You guys need to think. I'm a huge fan of understanding to the T what your monthly budget is, how you spend your money. A lot of folks like using these fancy apps. I think the problem is that you're not putting the work into them, and it's always easy to forget what you're doing with your with the mobile apps and the budgeting. It's just more manual. It's manual to do an Excel sheet, which I'm a fan of. And again, we've been doing some budgeting, like emergency management classes for folks, just giving out information. And the same thing with this webinar today. It's not really designed like, great, if you want to buy a home today, that's great, but there's other people out there that are looking at buying homes, or you might be thinking, hey, in 5 or 10 years, how do I use the VA home loan? This gives you those tools to do that. And I'm sure there's a lot of things you guys can think of when it comes into that. But those are things you guys need to think through yourself. Now, let's talk about what's happening. You know what? I'll cover what's happening today towards the end, because there's no simple answer to it. And we're almost done with the presentation anyways. So here's a chart of what it looks like renting versus buying. So on the left side column, you'll see that. Sorry guys, I kind of jumped the gun on that, but let me just get my wand out. Perfect. So on the left-hand side, you're going to see what you pay in monthly in rent. It's going to aggregate that data if you're paying that over 5 years, 10 years, 15, 20, 25, 30 years. Some people are not fans of buying a property. They rather pay rent, which is fine. The thing is that your landlords, they have mortgages taken out, and all you're basically doing is paying their mortgages so they have the equity in their property. But also, if you buy, it doesn't give you the flexibility that it does with renting. And renting is not bad in any way. You might not be building value, but if it fits what your situation is, that, hey, I'm here temporarily, or we don't like any of the areas that we look at, or the places that we do want to live are just too expensive, well, renting is what it is. Buying, though, right, gives you the freedom to do whatever you want with the home, but you also take on those liabilities. So this will be something you guys are going to have. This is in the PowerPoint that I sent you guys. So just be on the lookout for that, and just let me know if you have any questions. Let's talk about what's happening today in the market with the coronavirus. So this is having an impact on everybody. And so I have some good questions today from a client that's down in Florida, just asking like, hey, what are your 2 cents on should I be buying or shouldn't I be buying? And so I'm going to give you kind of a lowdown of a couple of different things of my thoughts on this. So one, the mortgage industry is facing something that it hasn't faced before when it comes to, plus if you guys didn't know this, right now the government passed with its CARES Act this new stimulus plan that's going to let people not make their mortgage payments. This could be for the rest of the year, up to 12 months of deferred mortgage payments. Some companies are already doing this for folks. But you have to be very careful, read the fine line. If you can make your mortgage payment, make your mortgage payment, because all that stuff is going to trickle down in the next 2 to 3 weeks. So you want to keep making your mortgage payments if you make them. And then just in the next 2-3 weeks, be on the lookout for what the new changes are. So one, mortgage companies have to so they're going to have to be able to defer payments for people that currently have mortgages. What's happening with that is there's no defined relief for all the people that these mortgage institutions that have to keep paying interest to investors, but they're not getting any money back. So that's why you see huge volatility in the mortgage industry right now. Rates swing from 2.875 to you can't even get a loan, to 4%, to 3.5%, so that you can't even get a loan anymore. This happens, on a daily basis. If you guys were me, you would have a heart attack by now. I guarantee it. The other thing we look at is there's going to be potentially pent-up demand. Let's say this ends in June, July, or July, August is probably more realistic. By the time everything kind of trickles down and the military releases people to go be able to buy homes. And then guys, by the way, this is all just extra stuff. So if you want to pop, you can. I'm just giving you guys some updates here. So when you look at the industry, you look at the pent up demand because people are not buying. People are being able to not stay in their current rentals because people don't want people moving. So when this is over, either you're going to have a lot of people that want to go out and buy something because we're still doing a lot of pre-approvals for folks. Rates are still relatively low when things are stable. They're not as high as they used to be in the 8% back in the heyday. Right now, things are still going to be in that 4, let's say 3 to 4, mid 4, even high 4%. Those are still normal rates. It's just that recently we saw a little blip of 2.75, but that's about it. So we anticipate either a pent-up market demand, or if people are already going to go back to school, this is why the summertime is very hot market, because it's when families have time to move. So that's just another factor to consider. And then the third one is once things stabilize, we'll see what happens with rates. I predict they'll probably be going down again just to kind of help stimulate the economy. So you have those factors to look at. And another thing right now with what's happening is people actually have an opportunity to buy a home where before they just weren't able to, or they were just outbeat because it was so competitive. This time of the year right now, it's crazy competitive, but not for everybody. So for veterans that are trying to buy a home, this might be the time to be able to actually lock in a property and be able to move. So just be careful though, because traffic isn't the way it's supposed to be. So a lot of folks in the DC area, if you look at the map, especially if you're in that area, you'll see everything is green. That is definitely not the case all the time. So just kind of be aware of that. So that pretty much concludes my webinar. If you guys have any additional questions, I did record the webinar, so I'll be able to send, it takes a while for the whole video to process, but I'll post it to my YouTube channel and then I'll send it out with a link to the VA Home Loan webinar. Again, if you guys have any questions, just feel free to reach out to me. Email is the best way. Just email me to my work email. I set up the Zoom call on my personal email, but again, just reach out to me through this. Again, if you guys have any questions, please reach out. Stay safe out there, and I'll talk to you soon.